independent landlords in California are bleeding cash, not from vacancies or repairs, but from a silent leak in their record keeping. You're losing thousands, not because you're a bad landlord, but because your documentation is a liability. By the end of this video, you'll understand exactly how a sloppy rent ledger transforms a clear-cut eviction into a dismissed case, and more importantly, how to fix it in one afternoon. You might think a tenant not paying rent is the primary cost of an eviction. You're wrong. The real financial hit comes when your unlawful detainer case gets dismissed. A dismissed UD case isn't just a delay. It's a financial gut punch. Let's break down the numbers. The average California unlawful detainer takes 30 to 45 days from filing to judgment. If your case is dismissed due to faulty documentation, you're looking at least another 30 days to reserve notices and refile. That's at least an additional month of lost rent. For a unit renting at California's average of $2,300, that's $2,300 gone. Then add filing fees, which are around $240 in California. Process server fees for the reservice of notices and the new UD filing. Budget another $150 to $200 per attempt. And if you're using an attorney, which you should be for UDs, you're paying them again for the refiling, easily another $1,500. So, a single dismissed UD case costs you, at minimum, $2,300 lost rent, plus $240 filing, plus $200 process server, plus $1,500 attorney equals $4,240. This isn't hypothetical. This is money you could have in your pocket if your paperwork was in order. Now here's where it gets interesting. The number one fixable cause for these dismissals isn't the tenant's defense. It's your inability to provide court-admissible proof of non-payment. California courts demand specifics when it comes to proving non-payment. They don't want your gut feeling, your bank statement summary, or a text message exchange. They want a clear, unambiguous, line-item rent ledger. This ledger must show the original due date of the rent, the exact date the payment was actually received, the payment method, cash, check, Zelle, the amount applied specifically to rent versus late fees or other charges, and a running balance. Think of it like a bank statement for your tenant's account. Each transaction needs to be meticulously recorded. Without this level of detail, a savvy tenant's attorney can easily poke holes in your case, arguing that the exact amount due was unclear or that payments were misapplied. California Code of Civil Procedure Section 1161 requires a 3-day notice to pay rent or quit to state the amount which is due. If your ledger can't definitively prove that exact amount, your notice is defective, and your case is dead on arrival. You can build a court-admissible rent ledger in a spreadsheet like Excel or Google Sheets from scratch. It doesn't require expensive software. Your columns should include lease start date, tenant name, unit address, rent amount due, due date, payment received date, payment method, amount received, applied to rent, applied to late fees, applied to other charges, running balance. Each row represents a single transaction or charge. When rent is due, you enter the rent amount due and the due date. When a payment comes in, you fill in the payment received date, method, and amount received. Crucially, you then allocate that payment to applied to rent and applied to late fees separately. The running balance column updates automatically. This provides an undeniable chronological record of every financial interaction. For example, if rent is $2,000 due on the 1st and the tenant pays $1,500 on the 5th and $500 on the 10th, your ledger should reflect 2 separate payment entries for that month, clearly showing how each partial payment was applied. This isn't just good practice, it's your shield in court. But wait, there's a catch. Even with a good ledger, you can still screw it up. Most landlords make 3 critical mistakes with their ledgers that give tenants an easy out. First, applying a partial payment to late fees before rent principal. This is a common but legally dangerous default. California law, specifically Civil Code Section 1479, dictates how payments should be applied when the tenant doesn't specify. While it's complex, the safest approach for landlords is to always apply partial payments to the oldest principal rent first, unless the tenant explicitly directs otherwise in writing. If you apply a $1,000 payment to $50 late fees and then $950 to rent, and the rent due was $1,000, you've just created a $50 rent deficiency. Your 3-day notice to pay or quit might then demand $50 in rent. But if the tenant actually paid all rent and only owes late fees, your notice is invalid. Judges will dismiss your case. Second mistake, lumping all charges together. Your ledger must differentiate between rent, late fees, utility charges, and other charges. A 3-day notice to pay rent or quit can only demand rent. If your notice includes late fees or other charges, it's defective. Your ledger needs to clearly separate these so you can issue a clean, legally compliant notice for rent only. Third mistake, inconsistent record keeping. Some months you use a spreadsheet. Some months you jot it down on a napkin. This inconsistency destroys credibility. A judge needs to see a consistent professional record. Anything less suggests you don't even know what's owed. These 3 mistakes are easily avoided, but they are responsible for more dismissed UDs than you can imagine. You don't need a time machine to fix your records. You can reconstruct and certify a compliant rent ledger retroactively. This isn't just about preparing for a future dispute. It's about auditing your current financial health. Gather all your bank statements, payment apps, Zelle, Venmo, etc., and any documented communication with tenants regarding payments for the last 12 to 24 months. Create your standardized ledger spreadsheet. Go line by line, month by month, tenant by tenant. Enter every payment received, cross-referencing with your bank deposits. Document the payment method. Allocate the amounts correctly. If you have to make assumptions about how a partial payment was applied in the past, note that assumption. The goal is to create the most accurate, defensible record possible. This might take you an afternoon, but that single afternoon could save you $4,200 or more per incident. This isn't about being perfect. It's about being demonstrably diligent. Doing this before a dispute arises is the only time it truly protects you. Don't wait until you're standing in front of a judge with incomplete records. To recap, a dismissed unlawful detainer case costs the average California landlord over $4,200, and the primary culprit is often missing or inconsistent payment documentation. California courts demand a detailed ledger showing due dates, payment received dates, methods, amounts applied to rent versus fees, and a running balance. Avoid the critical errors of misapplying partial payments, lumping charges, or inconsistent record keeping. Take one afternoon to audit and reconstruct your ledgers retroactively. This is not just about compliance, it's about protecting your assets and ensuring your business runs profitably. Powered by LeaseBase Intelligence.